Have you ever considered quitting your 9 to 5 for a career in the day trading? Well, consider this. Day trading has a very steep learning curve. Day trading is very competitive. Not everyone can do it. Only 16% of the day traders are profitable after their first 6 months. Day trading is a profession and not a strategy to get rich quick. But day trading can be executed from anywhere in the world where there is a proper internet connection, including the beaches of the Mauritius. Day trading is flexible. You can be finished by 10 am and then do whatever you want during the rest of the day. Day trading is a license to print money. If you succeeded, and it is probably the only one thing that the government won't put you in the jail for. And you are in the right place because this is a video summarizing the most important takeaways from How to Trade for a Living, a book written by AZIZ. And here I am, Keshav Mahajan, bringing you the tips and tools for reaching financial freedom. Takeaway number 1. Stocks in play. Day traders always step out of their position before the end of the day. That's what separates them from the other traders. It's said that the day trader is only as good as the stocks he is trading, and the best stock of the day trader are called stocks in play. Stocks in play fulfill 3 essential criteria. First, they are trading at a high relative volume, meaning that they are being bought and sold more than what they are typically for the stock. High volume is a positive for a day trader because it's easier to get in and out of the trades. Second one is they have a fundamental catalyst such as earning reports, a merger, a major product release, a major contract, etc. Third one is they are trading independent of the market and independently of the market sector that they belong to. AZIZ uses scanner to find these stocks. He uses 2 different types, a pre-market scanner and a real-time intraday scanner. Once he has established which stocks they are in play, he will open up their stock charts and set up a plan. He will monitor these stocks on 3 separate computer screens, and usually there are only 2 to 3 great stocks per day. Anyways, so 1 chart per screen. From here, it's a guerrilla warfare. The day trader wants to wait for the right opportunity, then get in quick and get out even faster. Takeaway number 2. The 2% rule. A trader's primary objective should be to live to trade another day. As mentioned before, only 16% of the day trader are profitable after the first 6 months. In other words, the learning curve is disastrous. But if you can survive it, then great rewards will come. As your primary objective is surviving, the importance of risk management can't be overstated. You must learn to limit your losses if you want to reap the long-term profits of a great trading system. Well, you must be able to survive for the long term first. Therefore, never risk more than 2% of your total capital in any given trade. Risking 2% will allow you to be wrong a lot and still survive, because there will be times when you are wrong, times when you need to accept the defeat and get out of the trade. And you might think, but I don't want to make $1,000 loss. Well, you definitely don't want to make a $5,000 loss. Get out of the trade. Look for opportunities where you are risking cents to earn dollars. You want asymmetry in this, a large potential reward but a small downside. For example, risking $100 but having the potential of gaining $1,000. Your trade is then said to have a favorable R multiple, but that's beyond the scope of this book. Takeaway number 3. Understanding the candlestick. A day trader job is to analyze the balance of power between the buyer and the seller and bet on the winning team. Day trading is a study of mass psychology. Price fluctuations in the market are a result of actions of 3 categories of people: the buyers, the sellers, and the undecisive. The best way to illustrate the price fluctuations and the underlying psychology of the market is with candlestick chart. The candlesticks are a fight between buyers and sellers. It's an excellent indicator that tells you which group that is currently winning, the buying bulls or selling bears during that specific time frame. It can be hourly chart, 5-minute chart, or 1-minute chart. For instance, if the bull is currently winning, it can look like this. The height of the candle expresses how much the buyers are currently winning. So in the following candle here, we see that they win by a smaller margin than before, and the price increases by a smaller amount. As a result, positive price actions is represented by hollow candlestick. On the other hand, if the bears are currently winning the battle, it will be represented by filed, often red candlestick. If the sellers panic, it might look like this. Sometimes the battle is indecisive. This is then represented by an indecision candlestick, a very thin one, meaning that the price fluctuations during that time was minor. For a chart to be complete, it also be accompanied by a trading volume for each time frame. The trading volume acts as a great complement to the price movements. A high trading volume accompanied by either a sharp movement in the stock price or an indecisive one is an interesting situation, which the day trader can profit from as well. Shall see in the following two takeaways. Takeaway number 4, the support and resistance strategy. Many traders love to identify complicated chart patterns if they are accompanied by ridiculous names. All the better apparently. Try Google search, the abundant body, the dark cloud cover, or two black crows. AZIZ don't believe in these. If you make it too complicated, you risky curve fittings, and if the patterns are too arbitrary, they become subjective and suddenly you can see them everywhere. Instead, AZIZ prefers to use primary two very simple trading strategies: support or resistance trading strategy and Vwap trading strategy. Support is the trading terminology, means that a stock is showing respect for a certain price point. If the stock has bounded back up from such a point before, you can expect it to do so in the future as well. Resistance is the opposite, again. It acts as a ceiling from which the stock's uptrend is reversed. Here, how you trade using the support strategy. First, each morning before the stock exchange opens, find areas of support and resistance for your stocks in play. Second, look for indecision candles around the support areas accompanied by high trading volume. Buy, set up your stop loss slightly below the support areas on a 5-minute chart. Keep the trade until the next support or resistance areas. Fourth, if there is an obvious second support or a resistance area, you may sell half your position at your first level. Move your stop loss up to the break even and save the other half for that second level. Mirror this and you get how to start using the resistance strategy. Takeaway number 5, the Vwap strategy. Vwap means volume weighted average price, and this is the most important technical indicator in learning how to trade for a living according to AZIZ. For now, it will be sufficient to say that it's moving average and that it takes into account the volume of shares that will be traded. If the stock price currently is above the Vwap, it is the bullish indication, and if the situation is reversed, it's a bearish indication. Vwap should be included in your day trading platform. Otherwise, you should switch platform. So, how do you set up a trade with it? First, see if the stock in play show respect for Vwap as a support. Buy slightly above the Vwap, set up a trading stop slightly below. A break on the 5-minute chart should get you out of the trade. Third, keep your position until the next level of resistance. In this case, the next resistance level was expected to be the whole dollar level of $22. Fourth, you may sell half of the position close to the resistance level and move up your stop loss to your buying point. If you mirror everything I must add, you must use the Vwap for short selling too. The key for the now should be to master just one strategy. So pick either Vwap or support and resistance and start trading in a trading stimulator. For not over, complicating your strategy will allow for to focus on what really important, the psychology aspect of the game. Thanks a lot. This is the ending, and you can also follow me on the Instagram. Link in the description.